Have you been looking to buy a rental property, but you're just not sure if it's worth getting involved in? If so, in this video, I will show you 3 pros and 3 cons of rental property investing and give you my thoughts on if it's worth it or not. My name is Dustin Boudreau, and in a 3.5-year period, I've bought well over 100 rental properties without any prior team experience or much knowledge, all while living in a new area and investing in a place I am not from. So, I've done a lot of things right and also made a lot of mistakes. And so in this video, I hope to provide some of that information and just give you an oversight of some of the pros and cons of what rental property investing entails and what it actually is. And so let's start first with the pros. This is not an exhaustive list by any means, but I'll just go over 3 of each, pros and cons. So the first and foremost, which is my probably the biggest benefit to me, is a steady stream of income or passive income when done right. So rental property, very simply, whenever it's rented, a tenant pays you money every month to live in the property. And if you have 1, 2, or multiple properties over time, that income adds up and you have this steady flow of income, and it's not peaks and valleys where some months you get paid and some months you don't. So biggest benefit is a steady stream of income. The second pro is appreciation. Typically real estate will go up in value over time. And so if you keep a rental property for, let's say, 10 or 20 years and you've bought it correctly and ran your numbers right on the front end, there is a high likelihood that when you go to sell it, it will be worth more than when you first purchased it. And also keep in mind, through that time, if you have a mortgage on it, the tenant has been paying that mortgage down for you. And so if you get appreciation with debt pay down and the tenant paying your mortgage, it's really the perfect storm to increase not only your net worth, but the potential gains if you go to sell it. And then the third benefit, or the third pro, is the tax benefits that come along with that. So you can deduct things like your interest on your mortgage, maintenance requests, maintenance call-outs, insurance, different things of that nature. And so those are all very beneficial to you, especially if you have a day job. You can really offset some of the tax liability that you're supposed to pay each year with rental property tax write-offs, which is a really, really great thing, especially if you earn a lot on your day job. So those are some of the pros. Now let's go to the other side of the coin. Some of the cons would be probably the biggest shining light. What I hear the most from folks just getting started is the high cost of capital needed to get started. So that means maybe you need to put a significant down payment in, and then once you put a down payment, maybe you have to pay for maintenance, rehabs, things like that. So that could be the biggest con, especially for somebody that doesn't have access to a lot of money or savings or partners to invest with them. That can keep some folks out of the game. However, you don't always need a lot of money to get started. In fact, some banks, depending on how they finance the deal, if it's a good enough property, they'll loan you the money for the whole thing and you don't have to put up any down payment. Again, I have some videos on my channel, so if you're into that, maybe click around and check some of those out. But so that's con number 1. The second con is the ongoing cost and maintenance. So when you have a tenant that lives in the property, inevitably something may break. Whether that's the toilet, some of the plumbing issues, or a door knob needs to be replaced, whatever the case may be, you as the landlord will be responsible for paying that. And it costs money, obviously. So that can be one thing. The other thing that can be quite expensive if you don't plan for this is capital expenditures, or CapEx. These are the high ticket items, things like your roof, plumbing, HVAC systems that at some point in the future may need to get replaced. So those are all costs to you as an investor that could add up over time or at one time, depending on what goes wrong with the property at any given point. Also, you have things to just maintain the property. So insurance, property taxes, a mortgage if you choose to finance the property. So all things to keep in mind as you're getting started on the con side of the cost. And then lastly, you could potentially have tenant issues. You could have somebody that moves in that may destroy your property. They're not easy to work with. They don't pay their rent. You may have to evict them. These are all really things to keep in mind as well. And maybe a big solution to that con is screening tenants properly, looking if they're the right fit for your property. They have good history of rental references, good credit score, good background checks. Those are all things that you can look at. It's not 100% guarantee, but there's a much higher likelihood that you'll get a quality tenant that will treat your property with respect like if it was their own, and they'll pay their rent in a timely manner. And one of the other things that you can do to help mitigate some of that risk with the tenants is get yourself a really good property manager. They will have this process of sourcing tenants, what they look for, and understand the track record and the things to call out before moving somebody into your property. And so to recap, the pros are steady stream of income, appreciation on your assets in the future, and then also the tax benefits. And then the cons would be the high initial capital potentially needed, the cost and maintenance to keep up with the property, and then finally potential tenant issues. And so my thoughts is the pros very much outweigh the cons, especially if you're looking at this as a long-term rental investment strategy, 5, 10, 15, 20 years down the road. This is definitely not something that you're going to buy a rental today and get rich next year. However, if you ever heard of the compounding effect or the snowballing effect, some of these small actions is, let's say you buy 1 or 2 properties a year. Over the years, that can really, really add up to increase your net worth and your profitability and your cash flow each month. And so my advice to you would be, if you're thinking about getting started, look at these things with eyes wide open, both the good things and the potential bad, and then do your homework to understand how to get better. Understand how to run numbers on a property, what makes it a really good buy, how to source tenants, how to market the property. All of these are super important when you're just getting started out. So I would encourage you, if you're looking to learn more about rental property investing, consider subscribing to my channel. Like in this video, every week I publish content on how to buy rental property and build a real estate business, especially if you have a day job. And be sure to click the link in the description. I'll include my calculator that I use to run and analyze properties to see if it's a good buy or not. And I also made a video on exactly how to use it and where to find some of this information to plug it in to the calculator. So I hope this was helpful. Hopefully you understand the pros and the cons, and you see as well that the pros would definitely outweigh the cons. And I appreciate you watching. This video is a wrap. I'll catch you on the next one. Bye for now.